morning, everyone. Mark Soderberg with ADM Investor Services with your morning egg outlook for Tuesday, September the 3rd. Hope everyone had a wonderful Labor Day weekend as we come back from the extended break. We are seeing mixed trade here overnight. Prices are now firming up in corn, steady to just a touch better, about 3 to 4 better now in the soybeans. Mixed in the products, $4 to $5 higher in the meal. We're down over a full penny still in the bean oil. This largely in response to China launching an anti-dumping probe into Canadian rapeseed imports, and this likely was in response to China's implementing higher import tariffs on electric vehicles. Wheat prices are still about 3 to 4 lower across all three classes here as we approach the pause. Export inspections along with weekly crop progress and conditions will be out today, delayed a day due to the Labor Day holiday. I look for just a modest decline in ratings. Deliveries against the September contracts were in line with expectations. No deliveries for meal or Kansas City wheat. 227 against the oil, 6 contracts against beans, and 12 contracts in corn, 132 for Chicago wheat. Rain activity over the 3-day weekend, mostly confined to the deep south, with heaviest amounts in West Texas and along the Gulf Coast. However, some rains did impact the southeastern half of the Midwest. The vast majority of the nation's midsection will be dry this week. Rains, however, will linger in West Texas, and then heavy rains across the U.S. Gulf Coast. Temperatures across the Midwest will gradually build to above normal readings, peaking on Thursday before a front moves through, bringing sharply cooler temperatures by Friday and into the weekend for much of the north central Midwest and Great Lakes region. Brazil's first corn crop plantings have begun under very dry conditions. AgRuel is reporting that 8% of the crop is seeded in the center-south region. The outlook remains hot and dry for at least the next week to 10 days. It's something that we'll need to monitor moving forward as we approach the beginning of the soybean plantings here at mid-month. Corn harvest is just getting underway in the Ukraine, like the U.S. here. Yields are expected to be off due to the late summer drought in that region. Australia's Bureau of Agriculture, they raised their wheat production forecast by 2.7 million metric tons to 31.8 million metric tons. That's up nearly 6 million metric tons from a year ago, and just above the USDA forecast now. At USDA is at 30 million metric tons. On Friday, the EIA reported renewable diesel production capacity jumped 7% up in the month of June to nearly 4.9 billion gallons annually. And this is up 27% now from the end of last year. Bean oil usage in the month of June surged to 1.267 billion pounds. That's up nearly 18% from May, and is the second highest monthly usage figure ever reported. This following the USDA actually lowering the bean oil usage in their last WASDE report to 12.9 billion pounds. Also on Friday, the CFTC showed that both money managers and index funds were healthy buyers in the ag space. Money managers do remain pretty heavily short across the agricultural contracts, however, well off the record short levels from just over a month and a half ago. So firming up a little bit more here as we get closer to the pause. We'll see what crop ratings bring us here this afternoon, and then we do have the next round of USDA data towards the end of next week. I hope you all have a wonderful day.